Hello and welcome. Thank you for tuning in to Editorji. I'm Avni Raja. The budget speech is just hours away and expectations are high this time round. It's the last full budget of the Modi government before the 2024 general elections. So the big expectation, of course, is on the tax front, and that's what we're going to start with. We have a whole host of guests lined up to explain to us what we can expect, and then, of course, post-budget to analyze what the impact is going to be on you, on your investments, and on the economy as well. But first, let me welcome on the show, we've got Aarti Raute, who's a partner at Deloitte India. Aarti, thank you so much for joining us here on Editorji. Now, obviously, one of the biggest expectations here is on the personal taxation front. It's been quite a few years where we've not seen too much tinkering happen on that front. But this time round, we could see something. What, in your view, is likely?
First of all, thank you, Avni, for having me here. It's a pleasure to be talking with you just hours before the budget. And yes, there's a lot of expectations from the common man in terms of their personal taxes. The reason being, this is the first full year budget, the last full year budget actually from this government. And you're right, there's not been too much of tinkering with the personal tax rates in the past. So obviously, the expectations of the taxpayer is they will have a lot of benefits or tax sops, as we say, from the finance minister. The first one would obviously be a cut in the taxes. Avni, today what we see is there is the basic rate, which is 5%, and then the tax rate in the regular tax regime jumps to 20%. So there is a huge gap there, and people see that or feel that pinch. So probably the FM has a room to make an adjustment out there and do some kind of a rationalization at that. Also, certain kind of deductions like your ATC or your housing loan deduction that has not seen change in several past years. So that is something which the finance minister can really make a change in, and put some more money in the hands of the taxpayers. There are lots of other things, but these are some of the things which are top on the minds of taxpayers.
Yes, absolutely. On the two regimes that are currently there, the new regime, the exemption-less regime with a lower rate structure versus the old regime, we haven't seen too many takers ever since the new regime was announced. Do you think that is one area where we could see, some sort of incentives or to encourage people to opt for the new regime?
Absolutely. That is the expectation. The government is also cognizant of the fact that there have not been too many takers for the new tax regime. And that's the reason solely is because people do not see it as being beneficial to them. While the intent was great when the finance minister started off with saying that I give you a reduced tax rates, but I will have some kind of trade-offs in terms of deduction and exemptions not being there. But given the scenario that today's taxpayer, and especially the salaried class, is in, I think some of the deductions and exemptions are, kind of mandated for them. For example, almost everybody will contribute to a provident fund or an NPS, and not providing them with that exemption, they would definitely feel the pinch. Standard deduction is another thing, which everybody without any requirement to submit a proof is provided. But all of these things are denied under the new tax regime. What probably can happen is the finance minister will tweak the new tax regime and provide some of these deductions or exemptions, which will make it much more attractive to the salaried class and to the taxpayers in general. And that would, turn the tide in favor of the new tax regime.
Right. The other aspect, Aarti, I wanted to ask you about is if we look at the, tax rate, the corporate tax rate, which is 25 odd percent, and the highest tax slab rate for an individual, which is around 42.7 odd percent, there's a big discrepancy, a disparity on that front. Do you think somewhere there is a need to align both those slabs?
Yes, there is a need to align those slabs. But the reason why the highest tax slab for the individual taxpayers is at 42.74% is because of the surcharge. And that's
Yes.
a intended or a focused kind of an approach which the finance minister uh, took a couple of years earlier, where there was a serious amount of increase in the surcharge rates from 10% to say 15, 25, and 37%. For the first time, we saw slab rates for surcharge levied there. And that was a intended kind of an approach to tax the high net worth individuals. So while maybe tweaking around there, there is room for tweaking around there, I would say. But also the highest maximum marginal rate that everybody faces is 30%. Vis-a-vis, as you correctly pointed out, for the corporates, it's just 25%. So I think there is a need for rationalization there, where if they bring down that rate from 30% to 25%, I think there is a huge tax payer base that would be definitely benefited, and they would appreciate having more money in their hands at that point of time. The biggest takers from this change would be the people who are from the 10 lakhs and above income slab to something like a crore. So
Right.
those will be benefited the
Right.
most.
And the other part also, Ati, is with regard to, the ATC, for example. It's a section which is so crowded. I think this has been a demand that has been going on for several years now, to increase that limit, because it has so many things, and people are just not able to make use of it. Do you think that is something also that could possibly come in?
So there are two things, Avni, in ATC that need to be changed, or there is an ask that from the taxpayers that it be changed. One is to permit ATC deduction for the simplified tax regime, as we already called out. So, vis-a-vis simplified and regular tax regime, there would be hardly any difference. That's the first part. The second part is the limit. The limit of 1,50,000, which is currently existing, has been there for several years now. And given the inflation rate, given the kind of cost of everything that is rising, this amount or this limit has to be revisited. We also see that a lot of these, investments that are available under ATC, these are very long-term investments, and go a long way to fund the infrastructure projects or long-term high captive kind of investments for the government and the private sector. So it's in the interest of the government also to kind of push people to invest more into ATC benefits. Having said that, one of the points you made is that this section is crowded with a lot of investments. The reason being that it offers a wide choice to the employees and taxpayers at large to pick up things like of their choice. So you can either go for a PPF, or you can go for FDs, which are locked in for a certain period, or you could go in for life insurance premiums, and so on and so forth. So you have a wide variety of things, and in fact, there has been a ask from the taxpayers to increase this better and make it more comprehensive to include a lot of market based instruments also, which are new in the market today and which do not really enjoy the ATC exemption. So that has been the ask of the taxpayers in recent times. So definitely increase the kind of the variety of investments that are there over there, increase the limit, the threshold that is there, and extend it to the simplified tax regime also.
Right. Aarti, the other, before getting to the other aspects about long-term capital gains and what's needed there, there is a lot, like we've been talking about, that's expected on the personal tax front, the tax slabs really. Would you like to stick your neck out and say these two or three things are possibly most likely to come this time round?
Okay. The most likely things which I believe the finance minister could easily do, okay, and that's at the back of the fact that today we see this year the tax collections have been phenomenally good. There's an increase despite
Yes.
the economic situation worldwide. So the taxpayer would expect something more from the finance minister. And giving that perspective, what we see or what we could expect the finance minister to do is firstly try and make the simplified tax regime a little bit more interesting and attractive for the taxpayers, so that there are a few more takers to the simplified tax regime than the current situation. The second thing is that there could be a rationalization in the tax slabs itself, in terms of increasing the highest um, threshold from 10 lakhs to around 15 lakhs or 20 lakhs. That jump will make a big difference to the taxpayer. So tweaking over there will really help. And the third thing is to try and see whether there could be any increase in the thresholds for exemptions and deductions that are currently available. It could be your standard deduction or your ATC.
All right. Now let's get to the other part, which is the long term capital gains. Once again, there has been quite a bit of chatter about what could happen on that front. There is a lot of hope that there won't be any increase in the rates or in the duration of what constitutes long term capital gains. But the question really is, are we likely to see any simplification? Because right now there is a lot of different asset classes, different holding terms, different rates, all of that. It's quite complicated really for a retail investor to make sense of. That simplification is much needed, but do you think it could come in?
I think it's high time. It should come in, I would say. The reason is twofold. Today, investments into the marketplace is far more easier than the earlier times. Today, we have apps. Today, we have a lot of things pushed onto our mobile phones, which makes us really keen to, kind of dabble and go and invest into the market. So earlier, when we would see the risk takers only going to the marketplace, now there are a lot more people, and especially salaried class people, who would want to play around in the market for taking kind of a comfortable risk, but still trying to see how they can make some money over there. The challenge that happens today is the complex provisions in the tax laws, which make decision making difficult. So if I have to invest in two shares, I have to be sure as to how long I should be holding them, when do I sell, and what would be the tax rate that would be applied to it. That is going to be difficult for me if I have these serious amount of tax rates. Like, I have equity based investments which can be held for 12 months and they will be treated as long term, whereas I would have certain kind of debt based investments, debt based mutual funds, which will be taxed at long term rates only if they're held for 36 months. The difference is far varying, and this makes it challenging. This is one aspect of me which needs to be tackled in terms of the holding periods. The second is, of course, the tax rates that apply. Something goes to be taxed at 10%, something is
Right.
taxed at 15%. The other part
Right.
of this, Avni, is the stock options.
Yes.
People
Yes.
hold these stock options, and there is need to make changes onto this, because most of the people holding the stock options would be of startups or maybe of overseas companies which are not listed in India, so they also have to pay a higher price than the normal investors.
Hmm. Yes, I think that is also one very important, ask that especially the entire startup industry has on the ESOPs front. I think for our viewers, if you could just very, briefly explain where that anomaly is with respect to ESOPs.
So the current provisions for stock options, especially for startups, okay, they are in a way made to ease the tax burden for the employee, right? Because while for a normal person getting stock options of a listed company, he would have to pay the taxes immediately on getting those shares, that is at the point of exercise. But for these people who are, getting shares of startups, they will pay the taxes only post, say, encashment, or if they are leaving the company, in those scenarios. So there is a deferment of taxes in that case. But is that really enough? I would say no, because they are taking a far bigger risk as compared to a employee of a listed company, because that employee can exit at any point of time. But these employees are stuck till they have some kind of a IPO or some kind of a venture capitalist investing into their company where they are able to offload the shares. So to that extent, I would say there is a need to make a change out here. Also, the kind of startups that are eligible to go in for this kind of beneficial treatment, there are lots of conditions attached over there, and that makes it difficult for everybody to get the benefit of it. Only a handful of companies only can avail of this beneficial provision, which is an ask from the startup industry, saying that please make it broad based, make it available to all, so that everybody is benefited, because startups don't have money, so all they can
Yes.
offer their employees is stock options, and if that's going to
Yes.
be taxed at a very high rate, or it's going to be taxed immediately and the shares collapse, then the employee is really worse off, because he's paid the taxes and he's got no money.
Right. Now, of course, every sector, every industry keeps, giving out their wish list and their expectations. So whether it's a mutual fund, the real estate, insurance sectors, and more or less, these expectations are pretty much the same every year. We don't really see them coming in. But if you had to sort of just look at it from a slightly more broader perspective and zoom out a bit, what do you think are some of the most important ones across all these industries?
So I would say, I would bucket this into two buckets. One is basically tax reliefs. A lot of industries, a lot of employees of these industries are asking for tax reliefs, and employees will be industry or agnostic any which way. So personal taxation does not matter which industry you are in, but it would matter to people investing in these industries, where they would see that they are not being taken care of as compared to some other industries. So looking at that, it is necessary that there are some kind of tax reliefs to this to the individual class, where they have not been looked after well for several years. I would say the second part is the operational efficiencies and the operational processes of compliance that are there. One of the things which everybody sees is the kind of changes that people have to look into every year just to file their tax return. We had
Yes.
changes in tax forms, changes in requirements that are asked in the tax forms, and also there is a change in the tax portal. So all of these changes makes things quite difficult for the employees and for the individual taxpayers to comply with when they're filing the tax return, because they are coming up with something unexpected each time, which they have to kind of search around, and they're not used to those changes. So the ask from most people are that please do not make these frequent changes, because any kind of change, people have to get used to it. So
Yes.
it has to be this year. Of course, the government is coming up with a consolidated tax return, where everybody uses the same tax return, and there would be some kind of smart wizards which throw in only the fields if you check the box. Now that the
Right.
concern could be that as a layman, the person checks the wrong box or does not check a box, the things will not show up for him. So
Right.
that is the bigger challenge that the individuals are facing. Of course, they are very, very appreciative of the fact that you have 26 AS, you have the annual information statement, which provides a lot of information which they might have forgotten, or out of oversight they might have not looked into, and that gives you a kind of a ready base to when you're
Yes.
filing the tax return. You have
Yes.
a pre-filled tax
Yes.
returns, all of this is very, very good, but there's a lot more to be done.
Yes, absolutely. All right, Aarti, we'll leave it there. Thank you so much for joining us and for breaking down what the common man could expect on the taxation perspective. Let's welcome our next guest. We've got Ashish Shankar, MD and CEO, Motilal Oswal Private Wealth, who's joining us on the show. Ashish, thank you so much for joining us and speaking to Editorji just hours ahead of the budget. Your big expectations this time round. But before that, I mean, I just want to bring in a word on the long-term capital gains, because the biggest fear there is that there might be tinkering which may discourage investors. And since we've seen FIs selling heavily, it's the domestic investors who have been keeping the markets up. So at least I hope that there's nothing that discourages investors coming in on long term. Ashish, I think your mic is muted. If you could unmute, please.
Yeah, okay. Can you hear me now?
Yes, I can hear you. Please go ahead.
Okay. Thanks, Avni. It's a pleasure to be on your show ahead of the budget. Yes, you're right. I think the nature of capital markets has changed over the last couple of years. I mean, foreign investors have been selling, but domestic investors have been investing, and those flows have really held up the index. So I think the bare minimum that investors expect is no tinkering in the capital gains tax. But yes, there is expectation, and this expectation has been around for a while, that they homogenize the capital tax structure across asset classes, because some of them are 3 years, equity is 1 year. So I think those expectations are there to homogenize taxation across asset classes. But other than that, I think if the government just leaves the capital gains tax for equities the way it is, it'll be a huge sigh of relief. That's what I feel will work.
Hmm. And in terms of some of the other expectations that you believe should come in this time.
Yes, so Avni, there is little room for the government actually. If you look at the fiscal maths, right, on one side there is expectation that government will consolidate the fiscal deficit. See, it's been a little over a couple of years, and
All right, I think we seem to have a problem there with Ashish's audio. We will just try and get that sorted. But those are some important points that Ashish was talking about with respect to long-term capital gains tax. That is, we have to see whether it comes in. Simplification of the tax structure is something that is important as well. And of course, as far as the tax slabs is concerned, we might see some tinkering coming in there with the exemption limit, possibly basic exemption limit, possibly being hiked from 2.5 to 5 lakh rupees. That is one big expectation. Whether ATC will see an increase is something also we need to wait and watch. Remember, that has been a long-standing demand for quite a few years now. But that is something we have to wait and see. The new tax regime that came in 2020, that was announced in 2020, hasn't seen too many takers. So that is something we have to wait and see whether or not there is any tinkering done there to try and, in fact, make it more attractive and to encourage more people to opt for the new tax regime. So that is another important perspective that we might have to wait. There has also been some talk that we could see those changes in the exemption limits, certain further benefits in the exemption limits, which would apply only to the new tax regime. That might make it more in fact, to incentivize more people to opt for it. But again, that is something we have to wait and see, because remember, there is not enough, the government, the finance minister has to play a fine balance, walk the rope really, in terms of the fiscal aspect as well as trying to benefit the common man, because we have not seen too much tinkering with the tax slabs since 2017-18. So this time round at least one of the biggest benefits that is coming in. I am going to check if Ashish is back with us at this point in time. And Ashish, am I audible?
Yes, you are very much audible.
Okay, great. Yes, please go ahead. I think we had a bit of an audio connection problem. That's solved.
Yes, so
right. I think that issue is not solved as yet. We will try and reconnect with Ashish at this point in time. But for now, those are some of the basic expectations. You also heard what Aarti Raute had to say in terms of what we could see from the budget this time round. So a lot of expectations, whether it's the mutual fund industry, the insurance industry, and especially on the long-term capital gains tax front, simplification of the tax structure is one thing which is extremely important. And let's in fact take a look at this interesting facts about the budget while we wait for Ashish to be repatched.
Only few hours left for the budget 2023. Editorji brings you some interesting facts about the Indian budget. First woman to present budget. Former Prime Minister Indira Gandhi was the first woman to deliver the union budget. She presented the budget in 1970. In 2019, Nirmala Sitharaman became the second woman and the first full-time female FM to present the union budget. The shortest budget speech. In 1977, former Finance Minister Dhirubhai Mulji Patel presented the country's smallest budget. That was the interim budget. It was introduced on March 28, 1977. The budget speech that year consisted of 800 words. The longest budget speech. FM Nirmala Sitharaman holds the record for giving the longest budget speech. She spoke continuously for 2.42 hours while presenting the Union Budget 2020. With 2 pages not read, she had to cut her speech short as she felt unwell. Finance ministers with most budgets. Former Prime Minister Morarji Desai holds the record of presenting the highest number of budgets in history. During his tenure as FM, he presented 10 budgets, followed by P. Chidambaram, who presented 9 budgets, Pranab Mukherjee 8, Yashwant Sinha 8 and Manmohan Singh 6 respectively. Railway budget and union budget. In 1924, the British began the practice of the railway budget in addition to the union budget. The railway budget and the union budget were presented separately from that point on until 2016. Former Finance Minister Arun Jaitley brought forward the idea of clubbing the union budget with the railway budget and delivered a combined union budget in 2017. Style of pre-setting the budget. The budget was previously carried in a budget briefcase, but in 2019, FM Nirmala Sitharaman replaced it with a Bahi Khata that had the national emblem etched on it. In 2021, the budget became paperless, with the FM presenting and reading it out from a tablet.
Expectations are concerned, take a look at this.
Former Prime Minister Indira Gandhi was the first woman to deliver the union budget.
After a tough 2022, due to funding crunch and macroeconomic uncertainty, Indian startups have high hopes from the upcoming union budget. Single window clearance is one of the major demands for Indian startups, as opposed to registration with multiple authorities to claim tax incentives. ESOP taxation. Startups want a modification in ESOP taxation. NASSCOM has recommended that the facility of deferment of ESOP tax be given to a wider pool of startups. Minimum alternative tax. Startups and NASSCOM also want minimum alternative tax for eligible startups to be reduced to 9% from 15%. Tax relief incentive. Another demand is to increase the angel investor pool at the seed stage for Indian startups. Offer a tax relief incentive of 30% of the cost of equity shares set off against the angel investor's income tax liability for the year in which the investment was made.
All right, well, those were some expectations here coming in as far as the various sectors are concerned. But while we're standing by for our next guest, let me just take you through the key highlights of the economic survey as well. Important piece of document that was released yesterday. It's always released one day ahead of the budget. It's essentially a report card of the economy. It tells us how the economy has fared in the year gone by and how it's poised for the year ahead as well. So as far as the GDP expectations or projections really are concerned, it's projected to grow at about 6.5% in FY24. India to remain the fastest growing economy. One big takeaway is that the pandemic recovery is complete. That's very clearly what the economic survey is saying. However, the employment conditions have also improved, but a pickup in private investment is essential for jobs creation. But talking about various sectors and what they expect, take a look at what the insurance sector expects.
The insurance industry is hoping that at least some of their demands will be met in the upcoming budget announcement. The industry's demands include GST on insurance. In a move to make insurance products more affordable and attractive, the industry wants GST rationalization on insurance products from the current 18%. Health insurance premium limit. COVID-19 has proven that the current limit of 25,000 rupees is not enough and it needs to be significantly increased to at least 50,000 rupees. Parametric insurance. In the last few years, India has seen a lot of natural disasters like floods, earthquakes, landslides, among others. While the gap between insured and economic damages remains wide, government should launch parametric insurance in the forthcoming budget, says Tapan Singhale, MD and CEO of Bajaj Allianz General Insurance. Insurance for all. Though the government is vying for an insurance for all by 2047 PT, but still according to reports, 40 crore Indians have no health insurance. The union budget should include a provision for health insurance at the government tender rate for all. This tender pricing should be extended to all employers, companies to obtain employee insurance.
Well, that's what the insurance sector is expecting. Insurance sector expectations have pretty much been quite similar over the last few years. We'll have to see if the finance minister does listen to the sector this time round or not. Meanwhile, let's also tell you what some of the other challenges facing the economy as per the economic survey is. Although economic survey did say that India does not have to worry, the economy is strong and well poised to take on the next year. But the current account deficit is something that needs monitoring. High global commodity prices could widen the current account deficit. In fact, a widening of trade deficit, rupee depreciation, all of these are some challenges facing the economy. But on that note, let me welcome my next guest. Anuj Puri, chairman of ANAROC, is joining us to take us through what the real estate sector could be looking at this time round. Anuj, thank you so much for speaking to us here at Editorji. Of course, as far as the real estate sector goes, it has been in the doldrums for a long time, especially due to the pandemic. But last year was extremely strong, especially on the residential sales front. What is it that you're looking at from the budget this time?
Thank you very much, Avni, and a very good morning. Looking forward to an exciting budget. I think, as you rightly pointed out, Avni, we were sort of struggling before COVID. And then COVID hit, and we all were nervous what is going to happen to the residential sales really across India. And then as the lockdown started to open up, we discovered there was a huge amount of pent-up demand. And as a result of which the sector started to do well. And as you rightly pointed out, 2022 was a stunning year for the residential sales. Avni, it was not only for the residential sales, even for the office leasing. Contrary to the thought process that people have on the office leasing, it was the second best year that we ever saw in 2022 in terms of the leasing activity. As far as the budget expectation is concerned, Avni, dil mange more. So, whilst we have done well, but our thought is that there has to be more boost being given both on the commercial side. And commercial, genuinely, there is one big problem that the developers are facing, and I'll highlight that, which I am hoping that will be addressed in the budget today. And second is on the residential side, there are 4 or 5 asks that we have. Just to very quickly cover on the commercial side, you may recall that there was an SEZ policy, and the benefits of the SEZ policy lapsed last financial year. There is a lot of struggle now going on where the tenants are not willing to go into SEZs because the benefits have lapsed, as a result of which all those SEZs continue to remain vacant. So we are hoping that there will be some rationalization to allow the tenants to go into those SEZs despite the benefits not being there, and hence the alignment is required between the Commerce and the Finance Ministry to be able to provide ease for the tenants to go into the SEZ after the benefits have got lapsed. We're hoping that that will get addressed today. The second is on the residential. Affordable housing continues to do well, but we think is that the continuation of the momentum that is there in the affordable housing should very much be there, which means that the stamp duty benefits that were being given, which means the tax benefits that were being given under the PMAY should continue. The second is that we have asked for a long time the rebate that we get on the tax for the interest on home loans, which is really pegged at 2 lakh rupees, for that to be increased to 5 lakhs. And this has been our ask for a considerable period of time, saying is that 2 lakhs is really very minuscule, and that really needs to go up to 5 lakhs. The third is that definition on the affordable housing, which has been pretty strict. 30 square meters in tier 1 and 60 square meters in tier 2 needs to get enlarged, particularly what we have seen in the COVID period where buyers have wanted bigger apartments. As a result of it, the definition from 30 square meters in tier 1 should get increased to perhaps 60 square meters, and from 60 square meters, going up to 100 or 120 square meters for tier 2 cities. And lastly, we are really hoping that there will be some benefit that the finance minister will provide on the capital gains for the residential sector. The investors are very, very wary still to come into the residential sector. We do believe is that some portion of the real estate should really be in an investor portfolio. Today, it's about 95% end user portfolio. In various mature economies, you will see is between 15 to 20% remains with the investors. And we are hoping that if the capital gain benefits on the residential sale of property is passed on by the Honorable Finance Minister in this budget, then that will prompt some of the investors to look at hard assets within real estate.
Right. Anuj, a word on demand going forward, because we have seen, of course, the interest rates that have been quite high. They are likely to remain at this level even going forward, because inflation, though not very worrisome, like the economic survey said, is still an issue at this point in time. Do you see any sort of an impact on a sustained period of high interest rates?
Certainly, Avni. It'll be naive to say that no, there's going to be no impact and the demand will continue to remain as robust as it has been. I think there are 3 concerns that we have. One is that if the global recession starts to impact the Indian economy, some part of it we've seen on the tech sector. Certainly in Bangalore, we have seen, although there hasn't been much cut in the jobs, but there is nervousness. And once the nervousness starts to seep in, buyers are reluctant to make the heavy purchase on residential properties. So we're hoping that India remains largely decoupled, and even at a global level, if there is an economic slowdown, perhaps it's short and shallow, not long and deep. The second concern remains is on the inflation, because if the inflation continues, and you're right that it has tapered down, but if it does come back or if it continues at the current levels, then the developers will pass on the additional cost of construction to the buyers, which means the residential properties prices will continue to go up. And the third is the interest rates, which you rightly said is, that has both the financial impact and the eligibility. So one is the financial impact, which is the ability to pay. And second is the eligibility criteria. Many buyers that we are seeing are upgrading from a 2-bedroom to a 3-bedroom, or from a 1-bedroom to a 2-bedroom. But suddenly, because of the interest rate hike, their eligibility from the bank goes down to acquire the home loan. As a result of which, they are unable to upgrade. So those are the 3 impacts that can possibly have a negative influence on the demand. We're hoping that that the momentum that has got created through COVID should largely, continue as far as the demand is concerned.
All right, Anuj, we'll leave it there. Thank you so much for joining us and taking us through those expectations. We'll have to wait and see, of course, what the finance minister does announce on that front. But let me also welcome our next guest, Sajid Chinoy, Chief India Economist of JP Morgan, is joining us here on the show. Sajid, thank you so much for taking the time out just hours ahead of the budget. Consistent theme as far as the budget has been over the last few years is the focus on infrastructure spending, public investments, which sort of then, trickles down to various aspects from job creation to spending as well. Is that the theme that you're expecting to see carry on this year as well?
That's morning, Avni. Good to be here. That's very much the theme that we're expecting this year. I think the budgets had a very familiar template over the last 3 years since the pandemic started. Especially the last 2 years, the sense has been bring the deficit down in a realistic manner. And we expect some of that this year as well, maybe 0.5% of GDP fiscal consolidation. Be realistic, conservative, sometimes too conservative on the revenue front. And most importantly, on the expenditure front, as you pointed out, there's been a strategic thrust towards increased public investment. And I think this is exactly the right way to go. Because the good news is balance sheets in the private sector are much cleaner and much healthier now than they have been in a decade. This is both, bank balance sheets, NBFC balance sheets, corporate balance sheets. Credit has begun to flow. But we have to be realistic that a broad-based private investment cycle will still take some time. Capacity utilization in the manufacturing sector is still close to about 75% or thereabouts. We're looking at a lot of global uncertainty. The global economy is expected to slow this year. And so it's going to take time for private investment to pick up. Now, in the meantime, the public sector has to fill that gap. And therefore, I'd very much be looking for a continued push, a continued thrust on physical infrastructure. I think it's important to couple that with social infrastructure, increased health spending, increased educational spending. But what's particularly important is the center has to do a lot of the heavy lifting, because at least over the last 12 months, we're seeing that the states in the PSU capex has lagged. And so what you would like to see next year is not just the center pushing on, but carrying with it states in the PSUs.
Right. Absolutely, Sajid. Very, very important points that you've mentioned there. Now, just coming to the economic survey, of course, there's a lot of optimism going around. Economic survey says the recovery from the pandemic is complete. India poised to be the fastest growing economy, even though we are looking at a slightly slower growth for the next fiscal at about 6.5%. But I don't want to be a dampener, but I really want to ask you how bolstered are we really if we are talking about a possible global economic recession coming in going forward?
I think one has to make an intertemporal distinction here between the short term and the medium term. And I think the economic survey makes that distinction quite well. That I think we need to be prepared that if you have a sharp global slowdown in 2023, the IMF has upgraded its projection for 23. But despite upgrading it, global growth is going to be at 2.9%. which is still a whole percentage point below what global growth typically is. And some market analysts would believe that the IMF projections are a bit too sanguine, that global growth could slow further. Now, India will not be able to escape that slowdown. The fact is, exports have been a huge driver of India's pickup post the pandemic. And to the extent that the global economy slows and export slows, we'll have to brace for the fact that economic growth is going to slow this year. But at the same time, as the survey points out, there are lots of encouraging signs for the medium term. I think foremost among them is the fact that balance sheets, as I pointed out, are much healthier. And so we're slowly getting closer to a private capex cycle, but that could still take several quarters given the global backdrop, which is why I think the budget has this very delicate balancing act, because on the one hand, you want to anticipate the global slowdown and make sure that the budget imparts some fresh growth impulses. But on the other hand, you want to be very mindful that macroeconomic stability still has to be our foremost objective. This is still a very dangerous world out there. We don't know, to what level the Fed will take interest rates, for how long the Fed will keep interest rates at those elevated levels. These are the highest rates we've seen around the world in 20 years. We don't know what China's reopening does to push up commodity prices further. So there are any number of risks globally. And I think the budget today will have to walk that fine balance between preserving and protecting macroeconomic stability, but also trying to deliver some growth impulses.
Yes, absolutely. A word on the private investment that you were also talking about, Sajid, because even again, the survey did mention that a pickup in private investment is essential for jobs creation, which, according to me, is still one of the biggest issues that the economy is facing. What is it going to take for that private investment to really start coming in the way that it needs to come in?
You're right, Abhi. And I think if you break that down into households and SMEs and corporate investment. So if you break investment down, there are three big buckets here. There's public investment that we spoke about, which is the center, the states, and the PSUs. There is corporate investment, and there are household and SMEs. Now, I think the constraints are different. There is cautious optimism that we're seeing some pickup in residential real estate. We've had a decade of very damp growth in that sector. Affordability has increased, has improved sharply. Monetary conditions were much easier, and we're seeing some buoyancy in residential real estate. But of course, this was at a time where monetary policy was very accommodative. So it remains to be seen what happens to residential real estate. But that's the one sector that most analysts seem to be most constructive about in the near term. I think for corporate investment, we have to be realistic that yes, balance sheets are much cleaner. The pieces are falling into place. But right now, the constraint for me would be demand. That when you're looking at utilization rates in the mid 70s and you're worried about a sharp global slowdown or a possible US recession and monetary conditions have tightened, it's understandable why entrepreneurs will want to wait and wait for the global cycle to turn, wait for the interest rate cycle to turn. And therefore, we need to be realistic that a broad-based corporate investment cycle could still take some time.
Right. On that point about demand, Sajid, because that again has been one of the biggest issues since the pandemic, how to bring back that demand. Of course, it has seen a significant comeback as well. But given the situation we are in and what is expected, putting more hands into on the hands of the consumer by reducing the taxes, the tax burden, if that happens, is that going to sort of bolster the demand? Will that be sufficient by just sort of increasing exemption limits, for example?
Yeah. So, it remains to be seen what the budget offers. I would say that I think the fiscal space for any big tax changes perhaps does not exist. Remember, fiscal policy has been extremely accommodative in the pandemic, and we're clawing our way back. Given all the macro uncertainties in the world, and given the fact that inflation has been sticky, in India, the current account deficit is still at 3% of GDP. We have to kind of first prioritize macro stability, and those fiscal deficits have to come down. Now, with the deficit coming down, with the need to be realistic on the revenue front, with the need to push public investment, as we've discussed, there are limited degrees of freedom. And so I don't think there's space for a huge tax cuts today, for example. I think what will matter more from consumption, and if the middle class is looking for relief, I think the best relief will be on lower interest rates, right? And I think to the extent that there is fiscal discipline and bond yields don't go up, that will eventually filter through into more affordable interest rates. I think the best way to spur consumption, because I think top-end consumption has done well. We're looking more at kind of the bottom-end consumption, is job creation, right? That if you want sustainable consumption, you have to create jobs. And when jobs are created and people have job certainty and income certainty, that's when you get sustainable consumption. So for me, this is more about short-term measures. It's more about continuing with the government and the budget's strategic thrust over the last 3 years. And I think the government is absolutely right that we have to push on infrastructure, health, education. That process takes years. And if you continue down that path, eventually you will directly create construction jobs, and you will eventually crowd in private investment and create more jobs. And it's that job creation that we desperately need, which will spur consumption on a more sustainable basis.
Right. Sajid, one final question before I go on to my next guest. Out of the challenges facing the economy that the economic survey has listed, what is the one thing, perhaps one or two things that perhaps worries you the most?
Well, I think the global backdrop, there are still three possible outcomes here that we have to be mindful of. I know markets have become extremely sanguine, but there are three outcomes. One is that the global economy is resilient, but in this crazy world we live in, good news is bad news, because the better that advanced economies do, the more that central banks around the world will worry that resilient growth and resilient labor markets will not bring inflation down. That will mean monetary conditions will have to remain tight for longer around the world. And that has two risks. One is financial stability, something breaks when US rates are at 5%. And the second is you risk a hard landing sometime next year. So that's one outcome. Right. The second outcome is the US slips into recession, inflation comes down, but growth is very weak. And the third is you get some kind of a soft landing. Now, just because we don't know which of these outcomes is likely to pan out, it's that increased uncertainty that I think policymakers will have to be very mindful of and be nimble in responding this year.
Yes, absolutely, Sajid. Thank you so much for joining us. A pleasure speaking to you as always. On that note, let me welcome my next guest who's joining us here, Dr. Rana Mehta, partner and leader healthcare, PwC India, is with us. Thank you very much, Mr. Mehta, for speaking to us. Healthcare, of course, ever since the pandemic, the focus on healthcare has become that much more. And one of the biggest asks or the expectation has been an increased allocation towards healthcare because it's not where it should be, even though it has been increased. But what is your own sense of what you're looking for from the budget?
Thanks, Avni, and thanks for having me here. So I think two things. One, as you rightly said, one of the benefits of the pandemic in a way was that it put healthcare as part of the national discourse, right? We really never spoke. If you go to the previous budgets, you just see a passing reference. It also told us that, a healthcare crisis can cause an economic meltdown, right? Your previous economic maladies were all, was it subprime or was it a war as it's currently happening? So no one even imagined that, healthcare could be responsible for an economic meltdown. So I think, those have been two positive things at a global level. The importance which probably healthcare was never given has been there. I think one of the things is expenditure, right? And, how do you increase expenditure? But I think there are two components. One, I think the public expenditure in India is very low. Yesterday it came and it said 2.1%. It used to be lower than 1%. But I think somewhere they've also changed what constitutes healthcare expenditure, and a bit of sanitation and other components have been put in. But whatever the number, it is inadequate. But I think I'll be more worried about before you really increase the expenditure, because it's been seen that higher expenditures don't really translate into better healthcare outcomes. Let me give you an example. Singapore spends 5.5% of its budget on healthcare, and it has better outcomes than the US, which is close to 18%. So as the government begins to spend more, and the trajectory of the Indian government is moving away from a provider, that is, opening more hospitals and giving people direct care, to becoming a payer, which is buying insurance. And you've seen that through the PMJY. So I think putting in the whole component of, as you move from a provider to a payer, you ensure that, the outcomes actually improve. And I think that's the biggest imperative from the government, because there's a decision taken. We are not really going to be providing care, but we're going to give that financial accessibility to care for our population.
Right. Now, in terms of the healthcare infrastructure, of course, we've learned from the pandemic how important it is to, put in money to build healthcare infrastructure compared to what we were a few years back pre-pandemic, where we are now and where we need to be. How big do you think these gaps are?
Right. So, when you look at healthcare, the whole idea is how do you access a healthcare, right? First is a geographical access, right? But again, 70% of India's healthcare infrastructure is actually just in 20 cities. The second, I think, is important is a financial access. And that's where, the current PMJY scheme gives financial access to 500 million people. It's no point having a hospital down the road when you can't afford it. I think the third type of infrastructure we're really building is the technology, right? We've seen the benefits of the Aadhaar, the UPI, and how that has increased financial access. I think there's a huge learning in that. Can we get the technological access right? Right? Can people actually have, even if they can't go to a doctor, can they have this technological access 24/7? See, I think we are pretty much going where the US system is, right? Because way back in the 60s, they moved from basically the government said we will take up health insurance. And health insurance, in a way, should not be confused with healthcare. Just because you've given everyone health insurance doesn't mean he'll become
बजट मिलेगा
healthy.
वित्त
So
मंत्री
I think
निर्मला
the
सीतारमण आज
component of how this whole transition will happen becomes really very, very important.
Right. On the point of health, health insurance, we've seen that even despite going through the entire pandemic, the health insurance penetration is still quite low at this point in time. One, of course, the industry says it's because of the taxation and what needs to be done. The exemptions need to be increased for health insurance premium. But on the other hand, is that sufficient? Where do you see that gap is? Why that penetration of health insurance not increasing?
Yeah, so I think you got a very good point, and I think this may be critical to, and I'm thinking some things in the budget may be announced on this. So the first thing is the coverage, right? So the government covers the 500 million who have no way of and will never buy insurance. There is another component, like most of us who have insurance, either our firm gives us insurance or we buy. There's this whole component about 400 million, which the Niti Aayog calls the missing middle. Who probably don't qualify in that 500 million, but they probably also don't have the resources to buy the commercial insurance at the current rates. So I think that the real challenge is that 400 million. How can the government actually look at, whether it's by incentives, whether it's setting up a whole mechanism, that gamut also comes in and gets insured and has access to good quality care. Now, this is a component where there is a certain amount of affordability, but it's probably not so much that they can go and buy the insurance policies on their own. So mechanism both on the premium side and also on the delivery side, because the premium is obviously very related to the total cost.
Right. So would you like to sort of, stick your neck out and tell us a few things that you think might be announced this time from perspective of healthcare?
So, it's difficult to always do. So I think there are two components. One, like I said, we could look at, is there a mechanism for the missing middle, the 400 million who are getting left out? That's one area I would look at. Secondly, I think, a greater focus on the technological access. And we know about the APDM program. So, how can that be rolled out, implemented? The third thing, I think what we really found wanting, Avni, was the critical care infrastructure in the pandemic was totally missing. And, public memory is short, but, I think that's something we should look at. How can we really build that critical care infrastructure? The fourth component I really think is, there is a lot of hospitals which the government runs. Say, take an example, the central government runs hospitals run by the railways, by coal. Can these hospitals actually, and they're really underutilized, can through a public-private partnership, the government look at using the operational efficiencies of the private sector to actually unlock value in this infrastructure? Because creating new infrastructure, we can all say is easy, but it takes a lot of time. And it has an impact which, if you do a hospital, the impact may come 7 years later. Can we really wait for that? The second part, I think, is that, we've also, India has become like a destination. It's called, not medical tourism, but medical value travel. And that's because it creates value. So it isn't the typical thing. And people are coming here. So, if your child is born in Africa and he has a hole in the heart, you don't have any options. Either you can take him to London or you can take him to the US, which is really unaffordable, or you can bring him to India. So it's an arbitrage. Sometimes we say it's the arbitrage on the price, but I think it's also an arbitrage on the skill. So I think medical value travel is one of the areas where the government can really channelize it and make it big. It also helps us because this is one of the biggest soft powers for our country, right? People coming in and they realize how good India is. So I think those components, I think if the budget can really catalyze these components, I think we should do really well.
Right. And Dr. Mehta, another point I wanted to just talk to you about was with respect to how technology can sort of, help in this entire space of improving healthcare access. Of course, you have the Ayushman Bharat Digital Mission also that is being rolled out. How much of an impact is this going to have, or does some more need to be, how much more needs to be done on that front?
So I think again, going back to, what I said, we have a great advantage. When the US moved from a provider to the payer, they didn't have technology, right? And I think, when people say, what's the model of healthcare in India going to be? I think predominantly based on technology. So I think the building blocks through the Ayushman ABTM have been set up. But I think it does take time for implementation, execution, and actually making sure that, everyone comes in. Unlike financial services, this is a very, very complex ecosystem, right? There are formal providers, there are informal providers, there are people who are urban, rural, every segment is different, right? The whole healthcare ecosystem itself. So one of the components which is actually mapping out the ecosystem, identifying each stakeholder, and then putting his name, and then getting every Indian to have an Aadhaar ID. So that while we spend on healthcare, we often keep repeating the tests. I'll give you an example. A person who gets sick in a village, when he goes to the town, the blood tests are repeated. He goes to a large city, the tests are repeated. Why do they need to be repeated?
Right.
If they can be electronically captured in the first place. So I think there's a lot of low-hanging fruit in this whole system on technology. And, if you're not a superpower on anything, at least we are a superpower when it comes to technology.
All right. On that note, Dr. Rana Mehta, thank you so much for joining us and speaking to us with respect to the healthcare. And with that, it's a wrap from me for now, but I'm going to hand it over to Vikram Chandra, who has a whole host of guests lined up to take you through what are the other expectations from
broad-based recovery right now. And though inflation continues to be a problem, it's not settled as yet. And so there is the survey yesterday also was pointing towards some sort of cautious optimism on the inflation front. Then I think the major risk right now is from the global side. The advanced countries are expected to slow down very sharply, and that's going to reflect on our exports and via exports on the sectors that service the export demand. So there is a downside risk from there. And the other, I think, risk from the external environment is that when you run a high current account deficit, the financing of that becomes an issue when the global financial conditions are tight, and which they are right now because the central banks in advanced countries are raising rates. So that, I think, so these are some of the worries. But I think overall, India continues to do better than most economies of its size right now. So how the domestic demand will hold up in the face of these external risks that's what will have to be seen. I mean, and I also want to point out that the assumptions that the budget makes on the growth, etc. I think last year's budget kind of highlighted that those assumptions may not hold in such a uncertain environment. So you need to have a very nimble approach and recalibrate your assessment of various aspects of the budget throughout the year. So that's one. And then second, I think issue that I want to highlight is that the budget doesn't have too much leeway. I mean, the ability for higher discretionary spending is very low because you have to maintain fiscal deficit on a declining trajectory as a percentage of GDP. So and your committed expenditure is very large part. I think almost
90% of the tax revenues are eaten up by committed expenditure. So the flexibility is very low. So when you don't want to borrow too much, you don't have much discretionary spending, then it becomes really a very tough balancing act. I think every budget is a tough balancing act, but this one is going to test the dexterity of the policymaker much more.
All right, let me just try and get some specific proposals out of you. I know we are past the era where we're really hoping for a lot of indirect taxes to be changed. In fact, people say there should be continuity. There are expectations for changes in personal taxation, at least this time around, and also maybe some signals around reforms, the paths that are going to be taken forward. What are some of the things you would like to hear in this budget?
Well, I think so there is enough evidence that the lower income brackets have faced higher inflation, and the disparity between rich and lower income categories have risen. So and there is need to support the particularly the lower middle class. So I think in this milieu, it becomes important to adjust the tax rates because or standard deduction, etc. The reason for that is because they have not been touched for quite some time, and because of high inflation, their value has reduced. So you're not getting that much exemption in real terms that you used to get a couple of years back. So I think there is some need to do that. So there could be some rationalization on that part. The big reform on tax would be get rid of exemptions and make it straightforward. I think that will have to wait. Then other is, I think, the government, how the government tries to support the vulnerable sections. One is through the food subsidy, et cetera, et cetera. Then second is whether they push for more construction activities which are labor intensive and so on. So I think these kind of strategies, what I would be looking for, I mean, what the budget does on these. And I think overall then there is also need to push capital spending. So now you have to grow the size of the pie, and that can only be done by increasing making growth faster, and then you have to redistribute it also. So I think both these elements, I think I'll be watching out, and I would also be looking for whether the budget doesn't lose sight of the medium term, which I think the economic survey pointed out yesterday, that you need more reforms to raise the growth potential over the medium run. So it expects India to grow at around 6.5%. If you want to grow faster over the medium run, then you need to do more.
Right. So, quite often it is said, worry about the fiscal deficit, don't spend too much because it could affect private investment. Now, the economic survey and recent theory seems to be saying, spend on things like infrastructure. Don't worry about the fiscal deficit that much. Spend on things like infrastructure because it could crowd in private investment. So is that something you think we're going to see a lot of? Massive spending on infrastructure and on capital expenditure?
Well, they will keep their focus on infrastructure spending, particularly in the roads, railways, etc., which they have been doing in the last 2 years. But I don't think there is space for a massive fiscal spending by increasing the fiscal deficit. So they have to reduce the fiscal deficit because they've committed to a glide path to cut the fiscal deficit down to 4.5% of GDP by 25-26. And that's a pretty stiff target. To be on that target, they also have to reduce the deficit this year as well. I think there are some other positive sides of cutting the deficit. I think it makes RBI's life easy because the central bank is trying to control demand a little bit so that it can control core inflation. I think even the survey also pointed out that lower fiscal deficit means lower borrowing costs, I think, in the system. So I think there are, so you need to balance both these objectives. I think, as I pointed out earlier, there's not, it's not 0-1 option. I mean, there is, I think, there's need to balance both the objectives of pushing capex and also reducing the deficit. That can only be done by restructuring spending. So they will have to cut some spending on revenue spending and find out ways for more efficient spending.
All right. Just hold that thought. I do have Anshuman Magazine with me here as well, because one of the other areas potentially Anshuman is spending, you of course been taking a really close eye at the real estate sector. A lot of people will be asking this fundamental question: is it time to give a push to housing? Because the same principles we're talking about, spend money, get the multiplier effect, works a lot in housing. So do you think something will be coming in this budget?
I'm not sure what will come in the budget, because in the past,
What do you mean you haven't been drafting it all this time?
we've been sending. So, for example, this is a time where the government should really look for the big push, like you mentioned. And the big push is the interest rates. The mortgage rates have gone up, so they should give incentives for people to invest. So one is, of course, taxation side, whatever can be reduced. The other is there's Pradhan Mantri Awas Yojana, which had planned for 2 crores housing. Interestingly, 70 lakhs of those housing have been constructed. 1.2 crores are under sanction. The government needs to expand that scheme for. It's not been 100% successful in the sense that they have not been able to meet the timelines, but they still have done better than before. And also, there is long-term capital gains. Housing needs to come at par with, when you're investing in stock, the long-term capital gains is after 1 year. But if you're buying a house and if you're selling it, it's 2 years. So no doubt lots can be done for housing. But besides housing, infrastructure is the key. And this is not, because now as a country, it's not only housing, but it's also data centers. It's also logistics which are coming up. It's also offices, healthcare. So yes, there can be a big push. The budget can only allocate revenue, but also give incentives, especially tax, direct and indirect, which can stimulate demand. So this is the time for consumption.
Okay, specifically on housing, let's just return to it. Yes, there's been a lot of that. The Pradhan Mantri has been rolling out very successfully. What do you think the middle classes would like to see to get the housing sector going? I mean, let's face it, real estate has been affected by many things, including scandals, including scams, including housing not being delivered. What do you think they would like to see?
The key is, how can you make money cheaper to buy housing, right? The interest rates have gone up. So one thing is, like I mentioned, the taxation part. There should be not only for buying, but also for renting. There should be enough incentive on the taxation side for people to buy. Second is, if you'll be surprised to know that even now, with the prices going up, in the urban sectors, affordable housing is categorized as something which is for 45 lakh rupees. The prices have gone up, so they need to increase that and give priority lending to the housing sector. So the number one way to stimulate demand is always how to make it cheaper for people to borrow to buy housing. That's how it's been done globally. The mortgage rates were low, and that was one of the reasons why there's so much investment in housing. They've gone up, so the government has to think of, the budget has to think, how can they make it cheaper for people to, cheaper funding for people to buy. That's the biggest stimulation, and of course on the taxation side.
So the reason I'm asking that question is interest rates are what they are. Probably can't be changed right now because all around the world interest rates have gone up. The reason I'm asking that question is there's a lot of expectations that today we are going to see a major adjustment around personal income taxation, moving to an exemption structure. Now, given that a lot of people have been buying houses, essentially also keeping that exemption in mind, do you think somehow a glide path will have to be maintained? How would you do it?
Oh, absolutely. I mean, the thing is that you're absolutely right. Interest rates is beyond, has many other issues. But even in personal income tax, I'm saying even if they don't reduce personal income tax, give a huge reduction if you're buying a house, and including if you're renting the house, because both stimulate demand. And government has been widening taxes generally, but not reducing taxes. As the government widens taxes, this is every year, the hope is that, look, now the government has widened taxes, how are they reducing it? That's not happening. So this is a great opportunity for that,
All right, Anshuman, thanks a lot for that. We'll of course come back to you a little later and see how much of this is actually happening. But I just want to welcome Mr. Kamal Bali, who's of course the President and Managing Director of the Volvo Group, India Private Limited. Automobiles, auto components, this is another one of those sectors that's really been buzzing. It's actually a surprising high percentage of GDP. I don't think people realize that. So, Mr. Bali, what would you be expecting to see in this budget to keep that trend going, make India one of the major manufacturing hubs when it comes to automobiles?
Yeah, thank you. Morning, Vikram. I think we are, as a country, if we have seen in the last couple of years, the industry has been bouncing back after a dip during the COVID period, and we continue to do well. And I think as you know, that in India, almost 45% of manufacturing comes from automotive industry, as you rightly alluded to. So it's an important sector for India in particular, for manufacturing in sector in particular, I would say, and it has been doing well. There has been, and this is on the back of tremendous work which is happening on infrastructure building. I think that's really providing a good impetus, and reforms on ease of doing business, on policies, on the FAME scheme. So number of things have happened, and I think also the PLI scheme which has come in, and that is giving a renewed impetus to manufacturing and in particular automotive sector. And with all the emerging technologies coming in, the EVs, the hydrogen fuel cells, I can tell you, Vikram, that the next few years, or at least the next decade, is going to be very, very, I would say, bullish when it comes to the automotive sector. Of course, it's going to be not business as usual. It's going to be very transformative in nature, because it's not going to be the same technologies. Same technologies will also exist, but I think you will have to really balance, perform and transform at the same time, in the sense that you will have to really embrace new technologies, digitization, and I think all this. And this energy transition is going to be the major underlying story of the automotive industry, Vikram. And I expect the budget to really continue this. The budget has, I think if we see in the past, the government has already set up a hydrogen mission, and also EVs, tremendous focus to infrastructure support for the EVs. So I feel that if this can continue, the automotive sector will continue to drive the Indian economy in a good way.
All right, let's just look at some of what could specifically come in the budget. Of course, lots of that depends on growth and things like that. But in the budget specifically, there are a couple of areas. One, spending on infrastructure, spending on roads is, I guess, always a positive for the automobile sector. But more specifically, there could be a lot of talk around EVs, around incentives for that, around really encouraging industry to move faster, maybe more subsidies that should be given. What would you like to hear in the budget? Because this is the transition that's going to come, the shift to EVs. What would you like to hear in the budget about that?
I think the budget should continue the already set out direction with the finance minister and the government has laid out over the past couple of years. A lot of things happen on the sidelines and all around the year, not only in the budget. I think the direction has been clearly set out. There is a clear-cut hydrogen mission. India is trying to move very, very quickly on hydrogen. That's one very important thing, because this problem of energy, this issue of energy transition is a big issue. You will have to use all tools in the box. It's not going to be just EVs. While EVs will really be the predominant choice when it comes to two-wheelers, three-wheelers, within the city bus transport, but they will have to be for heavy commercial vehicles and all. You will need other technologies. It could be IC engines with hydrogen or hydrogen fuel cells, or biofuels to be used, other non-fossil fuels. So all tools in the box will have to be used to really meet up this challenge of energy transition so I would expect the budget to continue to provide fillip to this approach, that all tools in the box need to be used. We need to support anything which really is truly fossil free, which is efficient and which is inclusive. I think that, to my mind, is going to be the primary driving element in the budget, and we expect the finance minister to continue on that and continue to provide support. And PLI is a big thing, and PLI for battery manufacturing, PLI for ADAS systems, because advanced driver assistance systems, and I think this is going to be, to me, expected by the industry, and I'm sure this will be the direction the government should continue to work on.
All right, Mr. Bali, thank you so much for joining us. That was Kamal Bali, President and Managing Director of the Volvo Group. I'm going to come to PN Vijay in the studio in just a sec. But first, Jessica Seddon joining us. Dr. Jessica Seddon, let me just try and get an international voice also on what is expected at the budget. We were hearing about some of the possible changes that could come on EVs. When you, Jessica Seddon, you're, of course, a senior fellow at WRI, also adjunct fellow, Wadhwani Chair of India-US Policy Studies. what would you be looking at in the budget particularly and hoping to see in the budget?
So I think two things. I have the luxury of actually looking at the budget from two perspectives. One is recognizing that this is the last full budget before the election. So obviously there is a focus on the short term. But I think what I'm looking at is also the way that the different aspects of the budget set the stage for the longer run, both the energy transition that the previous speaker was mentioning, but also agriculture and urban transitions that are in the offing. So the way that I look at the budget is that there are really two components. One is kind of an immediate gratification aspect. That's tax benefits, fiscal incentives, things that can be denoted with the stroke of a pen, and then they exist. Are those incentives in line with building the long-term human capital? So incentives for education, incentives for vocational support, for technical education. Are they in line with building a healthier society? So incentives for healthcare. I've heard some discussion of attention to non-communicable diseases, to environmental health. But are the incentives in line with building the long-run capacity of the economy, as well as the immediate relief in terms of income tax, corporate tax, those kinds of expectations? The second, some of the infrastructure announcements that I think people are expecting can be looked at as directional signals. There's a gap between announcing a funding program, announcing an investment, and then seeing the follow through, seeing it converted into hard infrastructure, into new roads, transportation systems, et cetera. Again, I think the external perspective on this is really looking at, are these investments in infrastructure setting up India to have the kind of resilient supply chains, connectivity, port, road, digital infrastructure for the longer run, in addition to the immediate needs? So those are the kinds of things that we're looking at.
All right, Dr. Seddon, just hold that thought for a minute. I mean, let's get P. N. Vijay in on some of that. P. N. Vijay, Narendra Modi has just reached Parliament. Speech is going to start, in about 40 minutes, 35, 40 minutes time, and we will, of course, keep on discussing what is happening in the period into that. I just wanted to get your sense now of as Dr. Seddon was just saying, there are two things. There's the immediate gratification. Then there are the long-term incentives. Let's build out infrastructure, let's build out education, let's build out health. And I guess the third thing, which is politics. Now, you have in the past been very closely associated with the BJP's economic policy, not now, but you were very closely associated with it. What do you think Narendra Modi would have asked her to keep in mind right now? Immediate gratification, the political imperatives, the long-term requirements of the economy?
Well, immediate gratification, and political expediency are about the same, right? More or less. Yeah, I think...
well, immediate gratification could be some things that people want, which are not really political. Political is more like, subsidies and SOPs and what are sometimes called populist measures.
And vote banks and stuff like that, and states that go to polls. And Vikram, this is the last full budget. There will be a budget next year, but that will be just before the elections. And the general sense is, over the last 1 year, the middle class, the 45 crore population of middle class, 30% of India, hasn't got much in the last couple of years. To be honest, they've been worst hit by inflation. Gas prices doubling, petrol above 100, food inflation in double figures most of the year. And government has pumped about 10 to 12 lakh crores for the poorer sections. Rightly so. And the PLI schemes, etc., have seen huge amount, 3-4 lakhs, going to the large manufacturing sector. So, if I were in Nirmalaji's place and she made the statement, I am middle class, I can feel the pain of the middle class, I'd expect her to make a simple statement. Listen, guys, this is your turn. I'm giving you this 2 or 3 very simple things. Fiddle around with the tax limits, make it 4, make it 5, whatever. And also the home loan, interest on home loans, senior citizen scheme, increase it to 30 lakhs from 15 lakhs. These have a great announcement effect also. And what people forget is it's not bad economics. this money will go for spending. Look at the FMCG numbers we have seen. There is absolute FMCG, which is one of the safest sectors, is seeing great demand compression. So this money will willy-nilly go into shampoos, two-wheelers, this, that, and the other. And I think I'm expecting Nirmala ji to do something of that kind.
So you're saying things have been done for the poor, although that has to continue,
Yes.
obviously, because they're the ones who need it the most. A fair amount has been done for industry and industrialists and the rest of it. You think there's going to be a middle-class budget?
I believe so. I believe so, and I hope so.
Okay,
and then
believe?
capital gains, every expert has said that there are too many capital gains rates. We don't know what's happening. Have one simple rate for all assets,
Technically simplify income tax also, right?
Yeah,
You said have more slabs, but there's old scheme, new scheme, this exemption, no exemption.
I myself don't make
Just simplify it, because frankly, it's a maze right now.
Yeah, it's a maze.
It's a maze. It needs to be simplified. Dr. Seddon, if I could just place some of this into the global context. We were just hearing P. and Vijay talking about how the middle classes and the poor, of course, have been hit very badly by inflation, fuel inflation, food inflation. These are things that hit the pocket and the wallet of the poorest of the poor and the middle classes in equal measure. What do you think about the global setting? Is that something which you think the Indian finance minister is going to be keeping in mind? I mean, will inflation, for example, remain high all through the year? Are you going to continue to have some of the strains and stresses that we have seen on fuel prices, for example? What do you think she should keep in mind when it comes to the global context?
Well, I think the global context is hard. I just want to flag one thing, that the global comparison, there's a reason that one of the largest infrastructure bills in the US was called the Inflation Reduction Act. I think these kinds of concerns and kind of attention to the needs of the average voter are incredibly important in any democracy around the world. So it is completely understandable to pay attention to that. That said, I think one of the things that, from an external perspective, the eyes are on India is how it uses the relative high growth position. The economic survey numbers, some of the global predictions, India is doing relatively well. How to use that momentum and to continue that momentum by laying the foundation for productive jobs, for improvements in infrastructure, for building resilience, for attention to seizing some of the opportunities in the low carbon environment, some of the opportunities to innovate in battery technology, in cleaner energy production, in green hydrogen. How is India seizing this moment of transition to become a leader in these areas? And to what extent are both the incentives and the investments in the budget in line with that trajectory? And I think that's a very important aspect of the budget, that from an external perspective, this balance between the immediate understandable political needs and the longer run strategic vision, that balance is something that's very important to keep an eye on.
All right. Dr. Seddon, again coming to the global perspective, 2021 was a year where a lot of countries, a lot of companies looked at India and said, as we look at China +1, we don't know what's happening in China, let's keep India as a primary target for that. And that's been something which the Indian government has been actively working towards. China maybe, let's see what happens with COVID, but some people are starting to move back some of the money into China as well. What would you like the Indian finance minister to do to continue to encourage and incentivize companies around the world to make India that second base, to make India a place they can manufacture from?
Well, I think there are already some significant headwinds. We see the diplomacy that's happening this week in DC on defense and technology cooperation. So there are already headwinds to take advantage of. In terms of sustaining those, I think expanding access to special economic zones that are allowed to export and operate on favorable terms, making it easier to access facilities, labor, land, those kinds of things. That would be extremely helpful. Continuing to invest in open scientific and technology collaboration and into building the trust and the mutually respected systems for data privacy, for technology security, for intellectual property maintenance. Those are the kinds of things that will allow for a freer flow and a freer joint development of advanced research in both the digital chips and other areas that are, I think, incredibly important for Indo-US collaboration. I can't speak for Europe, but speaking from a US perspective, those are the kinds of initial conditions that would sustain the kind of momentum that is happening now. I do think there's a pretty major opportunity geopolitically right now for India to be a base for the reallocation of highly strategic aspects of supply chains. And it is India's moment to seize that opportunity in the global setup.
All right. Thank you so much for joining us with that perspective, Dr. Seddon. It was great to have you with us. I'm just going to now turn to Mukesh Bhutani, who's often with us on budgets, trying essentially to talk himself out of a job because he is managing partner of BMR Legal. And one of the key things that you do is help people navigate the thicket of regulations and rules. And P.N. Vijay was just now telling us the number of different tax slabs there are, trying to figure out, is this capital gains and what sort of a capital gains it is. You've been bravely coming budget after budget and saying we need to simplify this so that I don't have too much to do. Are you hoping that trend will continue? And is that a trend that's happening, by the way?
Well, I think over the years, the tax structure has got complicated because of a variety of reasons. One reason clearly is that because of the interplay of exemptions, government doesn't want to lose out on its fair share of taxes by giving away exemptions. So it is looking at this figure called effective tax rate and not necessarily the headline tax rate. So over the years, there is this tug of war between how much exemptions should be given away to new businesses versus what should be the highest marginal tax rate. Personally, in the interest of simplification, there is very little justification to discriminate between a manufacturing and a services organization. I can understand that if you want to promote new manufacturing, you give a concessional rate of 15%, which was announced in 2019. Similarly, even on the individual side, I think we have complicated the tax structure by introducing 3 levels of supercharges. And then even for the middle class, depending on whether the person wants to take exemptions for saving instruments or not. So there is clearly a justification. I think the bigger justification is on the capital gains rate structure, which is in my view most complex, either because of the threshold period or what class of assets do you have, or for that matter, what class of investors do you have. So there is a compelling need in the last several budgets to simplify the tax structure because it is very complicated from a business standpoint.
Okay. Do you think it's going to happen today? Long overdue, the simplification and setting into some sort of an order personal income tax, like has happened to a large extent with other taxation.
I'm more optimistic on the capital gains side than on the business side. But I think we should make a start somewhere, even on the business side as well.
By business, you mean what? Corporate tax or personal tax?
The corporate tax. The corporate tax structure.
Corporate tax, I thought, had been sorted out to some extent, hasn't it?
They have
come down, the rates are down.
Well, we have 3 headline rates, 15, 22 and 30. And I think there is certainly a case to merge it into 2 rather than having 3 categories.
Okay. Look, I've got the 2 of you gentlemen out here. Let's try and redraft personal income tax if we can. We can have fun, right? Whatever's in the budget is already there. We'll know what she intends in about, which her speech is half an hour from now, but we will know what she intends to do on personal income tax, I think about 1 hour and a half hours into the speech. If you had to redesign personal income tax, let's just start with that, personal income tax, what would you do?
Well, this present rate was fixed in 2016, I think. And after that, we have had CPI inflation of average of 6%. So just for inflation correction, we should be moving somewhere around 4. And I think if we went to the exemption limit of even 4, I think that'll be good. Many people are asking for 5, but I think that's a tall order. So 4, and then, you know, I would, the highest rate kicks from 10 lakhs. You know, what is 10 lakhs? I mean, 75, 80,000 rupees per month. That's
then you have other slabs also. You have a super rich tax which kicks in at 5 crores.
At 5 crores. I think that super we should just do away with. I think it's 30 is quite with the surcharge and all that. That's quite a nice tax you get out of the guy's hands. So I think kick that out. Make this 10, probably 20 at least. You know, a lakh or lakh and a half. How can you save with all the high cost of real estate, etc.? So if you want to do it to the big bang, the deng bang as they call it, you make it 5 and 20 at the highest.
Okay, moving slabs is one part of it, but let's just come to simplification. I don't know if you, Mukesh, you're probably the only person who can actually figure it out. There's an old system, then there's a new system. So one has exemptions, one doesn't have exemptions.
Correct.
Even if you don't have exemptions, then there are some exemptions that you can still have.
Correct.
Then there are multiple slabs.
Correct.
Then there's a 4% surcharge. Then there is a various rich surcharges if you have that.
Correct.
And the education says, oh yeah, that's part of that surcharge.
Yeah. So surcharge applies
What is this?
Surcharge applies to all categories of income who get pushed in the maximum marginal rate, 10 lakhs as Vijay described. The surcharge, then there are 3 surcharge rates. Super surcharge rate applies to income above 5 crores. I think it is very complex, but more complex is also on the business side. Why should there be a discrimination between a partnership or a limited liability partnership, which was supposed to be a quasi-corporate status, and a corporation? So a partnership and a limited liability partnership is taxed at 30%, but a company is taxed at 22%. So you have now different class of taxpayers doing the same business, but having a differing tax rates.
Isn't there a simple case? Okay, let me just put this out as a, without changing the amount of revenue you're getting from income tax. Isn't there a case to say, okay, here are 4 or 5 slabs. Forget about exemptions, excepting for maybe housing and, you know, investments, something or the other. Merge all the surcharges into this. So now you have whatever slabs you want. You can make it 10, 15, 25, 30, 35 for the rich. And just keep it to that. No surcharges, no calculation. Anybody can do it with a simple calculator.
I think the whole levy of surcharge is more a political issue, because the surcharge does not form part of the pool that is divided with the states. The entire surcharge and cess actually goes to what is called the Consolidated Fund of India. As far as cess is concerned, under the Constitution, you can levy cess provided it's for a specific purpose.
Okay.
And the courts have the right to ask the government, was it utilized for that purpose or not? So you need to be mindful now, go beyond the budget. So as far as individuals are concerned, people like you and me, we don't look at 30% rate, we look at whatever is the effective rate with the surcharge. But as far as the government is concerned, they need to look at it the other way around.
I'm about to go across. Jim Rogers is joining us, as is Madan Sabnavis. Jim Rogers, of course, is an American investor, financial commentator. A lot of people have been really listening to what he says about where to put their money in. And I guess the question to ask him is this budget likely to, is it something he's going to be looking at to advise people to put their money into India? Madan Sabnavis is economist at the Bank of Baroda. Jim Rogers, let me just start with you before I come back here and we continue to try and dissect what's happening with taxation. How bullish are you about India right now, and what are your key expectations from the budget that is coming out?
I do not have investments in India. I am always looking for investments in India. This budget does not excite me. You continue to build up your deficits, you can build up your debt. India can be and will be a great country again, but somebody needs to be responsible for the money.
All right, I seem to have lost you just there. Yeah. Before I come back to you, Mr. Rogers, I know Mukesh Bhutani has to leave us. So Mukesh, just quickly before you go, how would you simplify capital gains? It's the one tax we haven't spoken about. right now?
I think we should take away the distinction between the class of assets. So capital gains long-term or short-term should be agnostic to the class of assets. The second simplification we can look at it is no matter who the investor is, individual, corporate, special purpose vehicles, CIVs, it should be consistently applied because it doesn't really matter whether long-term or short-term capital gains accrue to A class or B class of taxpayers.
All right, so let's see if that is going to actually happening. Jim Rogers, let me just return to you. You said you are eyeing opportunities in India. Which are the sort of sectors, which are the sort of areas are you sort of putting onto your short list? And what would you like to see done there so that you can actually come and make that investment?
Well, it partially depends on what happens in the market. You know, the market's down only 10% from its high. So if something goes down a lot, it will interest me probably. But I'm also watching the budget to see where they're going to emphasize. You know what they will help and emphasize, and that's where I will look too. If the market goes down and gets cheap again. The Indian market is not cheap right now. It's been a great, great success, as you know.
Right. India has always had a premium to other emerging markets. That's not unusual. It's interesting that this year, so far, at least when it comes to Indian market cap, year to date, India is underperforming because of what's been happening with the Adani group stocks. But is that premium for India justified if India is the fastest growing economy? India is going to be growing much faster than the rest of the world. It's going to be growing faster than China. So is the premium justified then?
The premium is not justified to me, but I mean, I cannot speak for the world, but no, it's not enough. It's not cheap enough. It's down a little bit, but it's not cheap enough. India is a fantastic country with opportunities, but I don't see the opportunities right now. I will watch the budget more scrutiny, watch it later when I can, and see if there are opportunities, but I don't see anything right now.
India's always been seen, Mr. Rogers, as a services economy. That's where the Indian IT and that's been the major sort of a story. But I think India's been working very hard and the government's been trying very hard, and we might hear a lot about that in the budget also, to say, why are you assuming that India can be a manufacturing country? India can be that China +1 that we've been hearing so much about. Is that, you think, a viable dream for India to have? Is that something which could happen this year or the next year?
Well, I doubt it this year. India is still a very difficult country for foreigners to invest in. If you open up, if India becomes open, completely open to foreign investors, I'm sure it will be very exciting very quickly. But at the moment, I don't know if you've ever tried to invest in India as a foreigner. It's not fun.
Right. Your sense of the way the global economy is going, obviously American tech has corrected. We're not quite sure what's happening in the rest of the global market. Do you think there are other really attractive parts of the global economy which therefore capital will move to instead of India?
Well, I'm sure that there are other parts. I don't really find any right now. Agriculture is depressed, so I'm interested in agriculture anywhere in the world. But no, I don't see any great, exciting, cheap stock markets anywhere in the world right now. I mean, Russia's cheap, but I cannot invest in Russia, and most people cannot. But Uzbekistan I've invested in, but as far as large markets, it's hard to find anything for me. It's hard for me to find anything attractive here in February 2023.
I'd love to come back to you and get some more perspectives just before we hit the budget. Mukesh, I know you're desperately still trying to leave us, and we're not allowing you to go. We're not allowing you to go just yet. Tell me, as I always ask you every year around this time, what would you not like to hear in the budget? I'm going to ask P. and Vijay the same thing. Not like to hear.
I would not like to hear any form of greater enforcement in the legislative amendments which tend to give wide powers to the taxman. I can tell you in the last couple of years, because of the successive amendments that have happened, there is an element of thinking that is the tax administration getting more and more aggressive by giving powers to the assessing officers. So that's one aspect that I would certainly be not liking to hear about it. There have been many repairs that have been carried out in the last couple of budgets, which we as practitioners get to hear about it. And the fact that several hundreds of writs have been filed in the high courts to be able to deal with those amendments on the ground that they are unconstitutional is clearly not the right direction for those forms of changes.
All right. PN, is something you would not like to hear in the budget?
Actually, I can't think of anything very significant that will shock people. That's not this government's
inheritance tax
style. Yeah, exactly. I was coming to that. Some greedy bureaucrat somewhere, based on revenue considerations, may bring in an inheritance tax or a wealth tax or something like that. It's a populist measure. You won't get much money. It's a populist measure. So I'm afraid that something like that may come.
All right, that's what you would not like to hear. Madan Sabnav is now joining us, economist at the Bank of Baroda. Madan, just help us set, according to you, we've seen the economic survey, talk of growth, got to keep that growth going. What would be your key expectations from the budget?
So actually, when we are trying to formulate any kind of expectations in a budget, to keep two things in mind. One is that the budget is actually an income expenditure account of the government of India. And there are lots of policies which are announced outside the budget. So therefore, we need to temper our expectations in terms of policies. Because what we really see is almost every sector, every individual would like to have policies in a budget. But this is not really the forum for policy formulation. It happens outside the budget also. Second is that the government, since 2020, even when we had the most challenging times, has actually shown its commitment towards fiscal prudence in the sense that we did not spend what other countries did. And lots of critics were critical about that particular fact. But we know very well that the government is going to go along the fiscal prudence path, which can be defined as saying that we need to get to the 4.5% fiscal deficit ratio by 2025-26. So if we keep these two things in mind, what are the kind of expectations we could have? See, I would tend to believe that around 80% of the overall size of the budget, so if we go by last year, we had around 40 lakh crores of outlay. Around 80% of it is virtually committed. So therefore, there's nothing much that you can do about it. So you're left with around 25% of the budget, which has to go for capital expenditure, maybe for so-called freebies, which are being given in the form of cash transfers, so on and so forth. So I think the major thing what we should look out for is how perceptions are really managed in the budget. So this budget is all going to be about perception management, because with the elections coming up, there are expectations that there will be certain things populist. But to my mind, as long as we're along the fiscal path, nothing can really be populist. It'll be a case of reallocating expenditures from some schemes, cutting down on certain things, increasing somewhere else. Like, for example, the free food scheme has actually been done away with. Instead, we have the old PDS, which is going at a zero price for the consumer. So I think there would be these kind of reallocations which would take place. There could be some kind of tinkering which could take place on the income tax front, because I think the salaried class has not gotten anything for the last 7-8 years. There could be some kind of exemptions which could be widened, in the sense that some of the, say, for example, the savings schemes which we have under Section 80C could be widened, because today we have a problem of consumption, we have a problem of savings, we have a problem of investment. So I think the budget will have to do a little bit on all these counts to make sure that things are moving in the right direction. So maybe the capex will be increased, but let's not expect that capital expenditure of the government is going to help to bring about the accelerated growth which the economic survey is talking about. Because finally, it's all in the hands of the private sector. The private sector so far has not responded in the manner which was desired. You lowered the tax rate in 2019. It did not really lead to higher investment. So I think, since governments don't run on the basis of earning a profit for the shareholder, whereas companies do, so companies invest only when there is demand. There is demand when there is consumption. There is consumption when there is income. There is income when there are more jobs created. So I think that was the problem which we had even before the pandemic struck. So that's how I would be very much modest in terms of my expectations of my budget, more of perception management.
All right, Madan, just stay on with us. Sunil Munjal now joining us, and let me get his sense of it. Sunil, bet on growth, bet on the ability to be really, keep that economy ticking. And once you do that, everything sorts itself out, whether it's fiscal deficit or poverty or everything else. Is that what you're expecting? Another big bet on growth this time, or conservative budget, or a budget that's going to keep in mind that there are elections 1 year from now?
So thank you, Vikram. First, I don't know who the previous speaker was, but he stole all my lines. This is what I was going to say to you myself. But if I take a 32,000
that's okay. At least there's a consensus then, Sunil, between you. That was Madan Sabnavis from the Bank of Baroda, Chief Economist. There seems to be consensus then between the two of you.
Yes, yes. So I think one thing the government has demonstrated is its ability not to get tempted by excessive freebies before a before an election year budget. So that's one thing they have demonstrated. So I expect the budget to continue down the same path, pushing for growth, at the same time moderating where they can to bring the fist in control. Because that is one of our challenges right now. So the FM has a twin task ahead of her right now. On the one hand, to keep growth going at the same time, try and see how do you address the sectors which have lagged completely. This recovery post-COVID is looking very rosy, but reality is these are average numbers which are showing up very well. If you look at specific sectorally, individual verticals, we do have a number of them which are lagging behind very badly right now, and also causing job losses. The social fallout of that can be quite severe and significant in India, which is young, and India, which is impatient. So I think she has to work on both ends at this time.
All right. Mr. Munjal, just hold that thought. Jim Rogers is with us, and we're trying to get a bit of an international perspective of what global investors are looking at. There are some sectors, Mr. Rogers, as Mr. Munjal was saying right now, which are not doing too well. But one of the big stories, I think, of the last few years has been this major infrastructure drive that we've been seeing, so that India comes to at par with the rest of the world when it comes to roads or ports or logistics in general. Is that one of the things that is catching your attention here in India?
Well, everybody needs infrastructure, including India, and everybody needs healthcare, including India, and education, including India. But people do need sound currencies and sound balance sheets. And in my view, the thing that strikes me the most is, look, I know it's an election. I know an election coming up, but it strikes me that India is doing nothing as far as balancing the budget and reducing the debt. That's the main thing I notice as an international investor. But I know there's an election. I know that happens everywhere.
All right. Sunil Munjal, so looking at the highlight aspects that you would like to see in the budget, infrastructure, as I was saying, has been a success story. You may well see a lot more spending on that. There's the traditional conversation about let's allocate money to education and health. Healthcare allocation has gone up, but still lower than what happens in the rest of the world. And then, of course, there would be some of the schemes and the so-called populist measures that are important. We'll come to where she's going to get the money, but in spending, these are some of the areas where she will have to figure out where is she going to prioritize.
Agriculture and rural infrastructure to this as well, Vikram. And if you can figure out a way to look at the sectors which have a massive knock-on effect, there's a big multiplier to areas like real estate, house constructing homes. It is a social good, plus it has 154 industries directly connected to this sector itself. So similarly, I think she will look at sectors which have a higher multiplier effect to figure out a way to support those a little bit more. And you're right about infrastructure. I think that's been one of India's success stories over the last few years. And we certainly need to keep pushing that. And the expectation is this year, we should also be able to start crowding in some private sector investment, because that has clearly been lagging over the last few years. The opportunity on health is great, but we have brought, as you said, our spend up to 2.1%. We would, of course, like to see it higher, but it is certainly higher than it used to be.
Okay, Mr. Munjal, let me just drag you in on that note. From the point of view of where she has to spend the money, lots of, obviously it always happens every year, there's a lot of competing claims. Politically, where do you think the indication would come? I'm just trying to get yours, whether that's going to be a factor or not.
Politically, rural will, of course, get predominance, because there is rural distress. If you look at the NREGA figures, and if you look at FMCG companies' sales, etc., the incomes in rural areas, for whatever reason, have shrunk. So this is something which is politically positive also for the Modi government. The other point, slightly at a different perspective on the budget, I didn't see that coming into the conversation, is incomes. Growth and incomes. Everybody comes on TV and says there is growth, growth, growth. The gentleman from Bank of Baroda said you grow the economy and then the trickle-down theory, there'll be this, there'll be that. But statistically, if you see, and this is brought out very well by the Piketty report on inequalities that created quite a stir a few months ago. In India, the growth over the last 23 years after Manmohan Singh unleashed the reforms has been really a growth of millionaires and not jobs and incomes. It's been described by Jeffrey Sachs as more a growth of millionaires in India. And if you see the statistic, 5% of Indians hold 50% of the income of this country. And 10% of Indians hold 90% of the income of this country. So there is obviously, for the Modi government, since it's a democratically elected government, needs to do something about distributing this income. I'm not a great worshipper at the sanctum sanctorum called growth. Growth for what?
Okay. I think that's a really interesting perspective, and it might well. I'm just going to throw that to all three of my guests who I have with me on that, because yes, there is an election coming up. Madan Sabnavis, do you first of all agree with that basic theory? Is there a case to be made that a lot of the growth and the prosperity is the prosperity of the billionaires and some of the richest people on the planet?
It's fact.
And I mean,
it's not a theory, it's facts.
Okay, will it be something which she keeps in her mind? Let me rephrase that. Is this something she's going to keep in her mind, that there is a case to be made that a lot of the growth has been for some of the richest people on the planet, but you have to find ways of handling the distress that there is at the grassroots? Always important, and particularly important in an election year. Madan Sabnavis.
No, I think it's perfectly right when the statement has been made that most of the proceeds of the growth have gone to the richer sections of society. But that's the only way in which democracies can function, because we need growth to take place, because it's only the large corporates, the large people are going to employ more people, provide those kind of opportunities. So therefore, I feel that the role of the government, in fact, I take a quite different view, saying that what we call freebies is absolutely essential in a society like ours, because the government needs to provide these kind of handouts to the lower sections of society so that they also get integrated in a very, very small manner. But unless we have this kind of an equality, I think we will not be able to make progress. Think of a situation where we want to thwart the performance, the so-called private sector, then we will never be able to get the kind of prosperity levels which we have reached. And there is a trickle down. I agree, it's very, very slow. Even the poor people today have a mobile phone. That itself is a positive development. But they definitely don't have access to the kind of income or the kind of wealth which the richer people do have. So I think it's a kind of a necessary evil. And I think governments should be more focused in terms of these freebies, rather than like we belonging to the corporate sector, want the government to do everything for the corporate sector. I think they have a responsibility, both the center as well as states, for the poorer sections.
All right, Sunil Munjal, throwing that same point to you. Look, we talk about India as 1.4 billion people. It's the largest market in the world, or it will be once we overtake China. But for that theory to really work itself out, purchasing power has to be in the hands of a lot more people than just 20 or 30 or 40 million. Otherwise, you're like a European consuming country and not like not 1.4 billion. So is that, even from a good economics point of view, is there a case to leave purchasing power in the hands of people and to encourage that process to continue?
I think there's no doubt that the overall system has benefited from the market economy model that the world has followed 70 to 80 years, but the top end has benefited more. It's very clear. I don't think there's any argument there. But the problem is, at the bottom end, there's lots of extreme poverty, and that is not fair. So there is a need for us to address that, which is why I think what India is doing now, by way of new startups, innovation, providing platforms like the UPI, the new EarnD. So I think this is what will be the game changer for India. We will have to use technology to take a quantum leap from where we are, to be able to address the needs of the large sections of the population of India. And I think the moment you're able to do that, if you're able to put it on a well-oiled machine, I think the potential to grow the rural economy, because India cannot grow unless rural India also grows. And I think there is a real possibility here over the next 8 to 10 years for India to address this in a manner that you put yourself on a high growth path for a longer period than otherwise expected. And I think it is doable. It's a tough one, but it is doable.
All right, I think there are about a couple of minutes to go before the finance minister starts to speak. So maybe I'll get a quick last line from all of you on what you would like to see and not like to see in the budget. Jim Rogers, why don't you start from the point of view of a major global investor, keeping your eye on India. What would you like to hear the finance minister saying about 2 minutes from now? And what would you not like to hear her saying?
Please open your economy and your markets to foreigners. If I want to invest in Europe, I just go on the internet and invest. I would like for India to be the same way. You would be much more prosperous and successful if you did so. I do not like seeing the deficit go higher and higher.
All right, and any other specific points that you would like to see? By the way, the debate that we were just having about making sure that everyone can consume, the consuming class is widened than the relatively small base there is right now?
Well, when you have a successful economy, some people make a lot of money. That's the way the world works and has for hundreds of years.
All right. Don't worry about the fact, P.N. Vijay, to your point on inheritance tax, one of the things you would not like to hear. He says that's the way it happens in a good, successful economy. Some people make a lot of money. Don't worry about that. Encourage that. Just make sure that everyone else also rises.
How do you do that? I mean, I understand that in a capitalist society, everyone, a lot of people make a lot of money. But there's a big difference. There is a welfare state in capitalist society.
But we're moving to a welfare state now, aren't we?
Come on, what about healthcare? What about
on the foundation laid in the previous budget and the blueprint drawn for India at 100. We envision a prosperous and inclusive India in which the fruits of development will reach all sections and citizens, especially our youth, women, farmers, OBCs, scheduled castes, and scheduled tribes. In the 75th year of our independence, the world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track and despite a time of challenges, heading towards a bright future. Today, as Indians stand with their head held high and the world appreciates India's achievements and successes, we are sure that elders who had fought for India's independence will, with joy, bless us in our endeavors going forward as well. Our focus on wide-ranging reforms and sound policies implemented through Sabka Prayas, resulting in Jan Bhagidari and targeted support to those in need, helped us perform well in trying times. India's rising global profile is because of the several accomplishments: unique world-class digital public infrastructure, example, Aadhaar, CoWIN and UPI, COVID vaccination drive in unparalleled scale and speed, proactive role in frontier areas such as achieving the climate-related goals, Mission Life and National Hydrogen Mission. During the COVID-19 pandemic, we ensured that no one goes to bed hungry with a scheme to supply free food grains to over 80 crore persons for 28 months. Continuing our commitment to ensure food and nutritional security, we are implementing from 1st January 2023 a scheme to supply free food grain to all Antyodaya and priority households for the next 1 year. Under PM Garib Kalyan Anna Yojana, the entire expenditure of about 2 lakh crore will be borne by the central government. In these times,